That is genuinely delicious, and I'm not just saying that.
This sort of stuff is really, really scary, because the numbers start to stack up big time.
Wednesday's Domaine, the brainchild of Luke Hemsley, is quietly taking over the non-alcoholic wine world. Praised by critics and connoisseurs alike, it's setting the new standard for what alcohol-free wine can be.
Very refreshing, sir. Very refreshing.
In our very first episode of Scaling Sessions, we sit down with Luke to unpack the journey, from a COVID-era idea to a growing international brand that's rewriting the rules of the wine industry.
This is a big problem.
How many bottles?
We're talking thousands of bottles.
Oh,
We've got a lovely setup here. We're good to go.
Let's just start, Luke, by introducing yourself and a bit of background.
Yeah, of course. So I'm Luke Hemsley. I'm the founder of Wednesday's Domaine. We're an alcohol-free wine business. We often say that we're on a mission to become the midweek wine alternative for food and drink lovers.
That's something that I need, I think.
I think most of us do. I think some of us realise that we need it, others don't. But there's a clearly, huge opportunity there.
Huge. Like wine, midweek wine for the over 30s, I think is very much like a ritual.
Definitely. And it's interesting because I think if you look at different generations, what you'll see is that for a lot of people that was a ritual, habitual. You probably shouldn't say that in the context of alcohol, but it was unconscious, it was unthinking. A lot of people just have a glass of wine with dinner, and then people across different generations, different demographics are beginning to question that, and that's where I think, alcohol-free generally, alcohol-free wine, and hopefully Wednesday's Domaine have a real role to play there.
Yeah, I think the alcohol-free movement in general has just absolutely boomed over the last 5 years. Like, there's so many examples of that. It's probably like beer first, which maybe took a while to catch on, and now you're seeing, as I was talking to you earlier about kind of like CBD, THC alternatives to alcohol in the US. Obviously, you can't do those here. But people are like really craving some sort of alternative to that alcohol habit.
Definitely. And I think we're very lucky with wine because wine is almost the last bastion. As you said, beer's kind of been done, spirits have been done, or are going along nicely. You've got functional drinks, which are particularly big out in the US. Wine is an industry that's, from a product perspective, it's incredibly hard to do. The wine industry is also largely rooted in tradition rather than innovation. So that's where there's you haven't seen huge steps forward in terms of the quality of alcohol-free wine. And that's why there's an opportunity for people like us who are coming in, looking at the space with fresh eyes. And I think beer is fascinating because, a lot of people, particularly if they're a bit older, will remember a time when Caliber was the only alcohol-free option. If you say that to people of a certain age, they'll kind of raise a wry smile on their face and they'll go, God, that was terrible. But now I'm so lucky to have, they'll often reference a mix of big brands and challenger brands. So people will say, I love Heineken Zero or I love Guinness Zero, but they'll also say, I love a Lucky Saint or I love a Days. And I think that's fascinating. And again, you're beginning to see that in wine where you've got bigger players coming in, but you've also got smaller, kind of high growth challenger brands, hopefully, like Wednesday's Domaine.
Yeah, well, it looks to be going that way recently. I do, though, want to go back just to your kind of background and how you got into wine. I know that you have, you've obviously have a real passion for wine, but where did that come from? And you've also got like a corporate background as well. So just a little bit about your background.
Yeah, of course. So if I start at the beginning, I studied economics at university, became a commodities trader, was fascinated by kind of history, geopolitics, and felt that was a great way to kind of gain exposure to that. I loved that, found it hugely interesting, but also realized that I want to set up my own business one day and realized that being a trader was one of the worst ways to go about that. So ended up making the transition into startups, and they're kind of the two things that were happening there. So I ended up joining a post-Series A fintech, which was called Market Invoice at the time, now called Korea. They were doing invoice discounting, helping small businesses to manage their cash flow. From there, I ended up joining a fintech startup called Fluidly, joined as the first employee alongside a serial entrepreneur called Caroline Plum, who basically needed a bit of a dog's body, a bit of a jack of all trade to do all the things that she was too busy to do. And in return, she would teach me how you set up, run and scale a business. So that was that side of things. That was my kind of exposure to startups, to high growth startups, really understanding the nuts and bolts and the very unsexy stuff that sits behind the scenes, the fundraisers and all the stuff you read in the media. Alongside that, I helped to run a community called Founders, which was essentially helping entrepreneurs to manage the highs and lows of building a business. And it very much focused on the personal as well as the professional. And that was fascinating because I got to sit in rooms like this, having dinners with all these amazing entrepreneurs that would really kind of talk about the nitty-gritty of growing a business and the impact that was having on their lives, whether that was relationships or elements internally within their businesses. So both of those things got me to a point where I felt well prepared to set up a business like Wednesday's Domain.
You can't not be inspired by that.
Yeah, and I think what I realized through that process, when I left commodities trading, I swore I would never touch a physical product again. I was like, they're an absolute nightmare. They go missing, they break, they go off. Everything that can go wrong does go wrong. So I wanted to move into tech. After 7 years in tech, I was like, get me a physical product. I'm not, tech is not me, basically, certainly over the long term. So when I looked at the type of business I wanted to set up, there were two things that it had to have. So a physical product and some form of delightful customer experience. And that gave me the lens through which to look at opportunities. And that's where kind of Wednesday's Domain started to come into view, essentially.
And a background with wine, potentially you're obviously very fond of the process behind wine.
Yeah.
I read a bit about like your passion for a certain northern Italian region.
Yes, you're right.
So you know your stuff, basically. It's not just, I think wine's a good opportunity, I'm going to get in there.
Yeah, I think, I've always been around wine, but like a lot of people, that knowledge from wine was quite patchy and was rooted in kind of what do I like and the occasions on which you drink wine rather than being what some people would classify as a wine snob. So certainly when I started the business, I had a very loose understanding of the world of wine, but I also went and did some exams around that. So there's something called the WSET, the Wine and Spirits Education Trust. I think someone will tell me I'm wrong on that, but there are various levels that you can go through. So a lot of people in hospitality, sommeliers, bar managers will go and do those courses. And level 1 basically just formalizes a lot of what you'd know from if you go for dinner with friends or whatever. Level 2 gets a bit more technical. It's called looking behind the label. So it will say that, certain wines from certain regions in France tend to be these grapes, for example. And it just codifies a lot of what you begin to hear. So there's both an interest and then some kind of formal learning that sits behind that.
Okay, and then just let's talk about then when you started Wednesday's Domain. I think 2021?
Yeah, exactly.
And was this something where you had it going on the side and it was a kind of a gradual process into moving towards that full time, or was the intention always to leave tech and go all in on the business?
Yeah, and so I think it's important because the bit that I've glossed over, Daniel, is how did Wednesday's Domain kind of come to be? So basically during COVID, when I was working for that last tech business I mentioned, Fluidly, I found myself, my wife and I moved in with her parents, with my parents. We found ourselves having a drink most evenings.
Like a lot of people.
Like a lot of people, right?
Yeah.
That's the story that will resonate with a lot of people. And it was rarely to kind of complete excess, but it was enough that you woke up most mornings feeling a bit dusty.
Every day blended into each other.
Exactly. And that
time
was how you delineated day from night. And that's what we all did, basically. And so went to the supermarket to check out some alcohol-free options, something I'd never done before. Looked at the beers, loads of them, got them home, really good. Spirits, very similar. Wine, very few options, very hard to find in terms of didn't really have any shelf presence. When I got home, really, really kind of poor quality liquids. So felt that there was an opportunity for a great tasting, beautifully branded alcohol-free wine. The problem was, to answer your question, I knew nothing about that. I didn't even know how to bring a physical product to market. So I basically got in touch with a friend of mine that I knew through Founders, who had run a pork scratching business. And I was like, what's the reality of this? Like, how does this even work? And through that, we began to build a bit of momentum to understand the opportunity, who I would need to work with. And so from there, I then approached the team at Fluidly to say, look, I've never made any secret about my ambition to set up a business one day. There's actually a bit going on behind the scenes, kind of early mornings, late nights, around the day job. I would like to gradually roll into this. So I was super lucky because I basically was able to wind down my time there. So I went from 5 days to 3 days to 2 days and then kind of jumped off. And within that, managed to raise a little bit of money so that I could begin the product development, the brand development, and not necessarily kind of pay myself, but there was enough that that combined with some savings from COVID, I was able to get going. And again, super fortunate in that respect because, again, people, if you're lucky enough to keep your job in COVID, people were sitting at home getting paid. So again, had a little bit of savings, which gave me that personal runway into the business.
Was the money that you raised initially, was that investors or was that friends and family, personal? Or you said personal already, but any other funds that came?
Yeah, so that is what would have affectionately been known as a friends and family round. Those are all people that I knew, basically. Okay. And a lot of those people came through the Founders Network. And that check size, we raised just over 100K, and the check size ranged from 2 to 50K. Obviously, 50K of 100 is fairly significant, and that came from one individual. But other than that, there were a lot of people that had personal connections with who were interested in making some angel investments. And obviously, in the UK, you benefit from SEIS, EIS, so tax breaks as well.
Then you use this money to do your research and your branding and everything like that, positioning of the product.
Yeah.
Take me through then what got you to kind of the final goal of having the prototype and ready to launch it? I presume you launched that with a Shopify store.
Yes, exactly. So there are kind of a few different elements there. There's the product, there's the brand, and ultimately in terms of the finished product the consumer enjoys, those are one and the same. And then there's the how do we actually get stuff to people through a Shopify store or whatever. So product and brand worked with an amazing agency called Kuba and Friends, founded by a guy called Kuba Wieserek, who'd previously been the founder of Eve Sleep, the mattress company that went on a kind of hyper growth story at one point. They were the mattresses with the yellow outer rims that kind of were all the rage at one point. So developed the brand there, and the brand was very much rooted in, we kind of had this notion of we want something that you're proud to carry through the door of a friend's house. When you turn up at a friend's house for dinner, and you've gone to a wine shop, gone to a lovely wine shop, you've put some real thought into it. Either it's a beautiful wine or it looks great and you're like, here you go. Whereas if you haven't and you've rushed and you've grabbed something from
Aldi and something,
like, yeah, I don't know who brought this.
Yeah, I'll keep this one for myself.
Exactly. So that was a big thing with the brand, and we didn't want it to take itself too seriously, because a lot of wine takes itself too seriously. A lot of non-alcoholic wine takes itself too seriously. So the combination can be pretty dry, actually. So that was the brand side. The product side was much, much harder. We worked with a drinks development agency here in London on that, and the product that we got to there was good, but it wasn't great. It was also really, really hard to make. It was somewhat inconsistent. The margin was shocking. But we released with that product, and so we had 2 wines, a still white and a still red, and we chose to go with still wines because there were a lot of sparkling wines in the market already, so I felt that the gap was there in still wine, even if it was a harder product problem to solve. And the approach that we took was effectively working with de-alkalized wine, so wine where the alcohol's been removed from central Spain and La Mancha, that we were then purchasing and blending here in the UK with some other elements to get to a product that had some of the sensory characteristics of a wine. So taste, aroma, texture, length, all those sorts of things. That was the kind of product side of things. And we worked with a third-party bottler, so we had relatively small runs that we could launch with. In terms of how we actually got those products to people, you're absolutely right to say that we launched with a Shopify store. I was very, very lucky that I ended up working with a consultant who'd previously run their own cold brew coffee business, a guy called Hugh Duffy, who is absolutely brilliant. And there's no way that I would have been able to set up the business as I did without him at that time. And he basically handled all the mechanics of that.
Of the Shopify store?
Of setting that up. So he then coordinated a build with a software engineer to get that all built, but he was like, here's how we need to think about it, here's how the website needs to be structured, and obviously we worked with the designer on that piece, but he was kind of like the project manager, the quarterback of that whole thing, and gave me a huge education on margins and everything you need to consider when you're shipping a relatively heavy product.
Yeah, it's the fundamental problem of selling beverages online. You talk about that a lot, actually.
Exactly. And people talk about how D2C is broken these days and it's not a viable channel for a lot of businesses. I just fundamentally don't think that's true. Yeah. But when you're shipping wine, you realise why a lot of people want to set up a supplements business that weighs absolutely nothing and can go through a post box, basically.
Yeah, 100%. I mean, I think having the margin, it's a personal issue that I would have had with a previous brand as well. It's just not fully understanding that margin. I think with beverages, I talked earlier about Breeze, they sell their cans are $7, and they came up with that price point intentionally at the very start because they knew that selling online, they were going to have quite a large CPA, cost per acquisition. It was going to have to fit in the shipping costs, the warehousing costs. So that margin, it really needs to be intentionally thought about at the start if you're selling something like beverages.
It's really interesting because when I first kind of conceptualized Wednesday's Domain, the price point that we were looking at was around £10 a bottle. And then we looked at the cost of goods, the COGS, and with Hugh, and I remember it vividly, we were sitting in a cafe in Brixton, and I was just like, I almost started sweating. I was like, this isn't going to work. Like,
we're going to have to sell 1 million bottles of wine.
And still lose money. Like, let's just pack up and go home. So that price point ended up creeping up to have somewhat of a sustainable margin. And actually, it's only once you're a bit further down the track that you realize how important it is to have a sufficient gross margin that allows you to absorb some of those elements, but also to be able to invest in advertising and also to finance your business and absorb the cost of financing
and hopefully
all these
pay
things.
yourself as well.
And pay yourself. Exactly. So I think a lot of people aren't intentional enough about this at the start. And that can either be through, that can be deliberate in terms of we'll find a way out of it, or a lot of people like me just didn't quite understand how all the things that go into a margin of any business, any physical product business.
I want to just move on then from when Wednesday's Domain was launched. I think it was 2021 really.
So we launched in July 2022.
2022, okay. And then I know there's like a really big turning point up in December 2024.
Yeah.
But if I'm correct, you correct me if I'm wrong, there is quite flat enough growth between those two periods of time. I mean, you're probably learning a lot about the business, being consistent, but in terms of, kind of hockey stick growth, it wasn't necessarily like that over those 2 years.
Yeah.
But then, something happened in December, which we'll get to.
Yeah.
But I just want to maybe see, like, how did you feel through those 2 years? Still very like motivated, driven, testing new things. What's kind of going through your mind during those 2 years?
Yeah, I think so just to give some context for anyone listening, there are basically two parts of the business. There are two stages of the business. There's the old wines, and then there are the new wines. And those new wines came to market in April of 2024. So we moved from having the two still wines that I mentioned earlier to having a range of 6 wines. So 2 sparkling, 4 still, and we completely changed the way that we develop products and our supply chain entirely. So rather than working with an outsourced development agency, we brought on a winemaker, and we've got a wine agent who effectively sits between the brands and the wineries, and that kind of changed the game. So we did all our own sourcing, we sought our own dealcoholization, again through a third party, we finalised our blending, so we had complete control of that. And that was when the growth really shifted. So what you're beginning to see in December 24, January 25, that is kind of a bit of a lag time from releasing those new wines in the April prior, which just got a much, much deeper resonance. But you can see that in the numbers that it is pretty flat until that point. To answer your question, how did I feel during that point? It was hard. I was lucky because I'd come from a tech background where people release shonky products all the time, and they're kind of like test and learn. Shonky is probably unkind to that original product, but I definitely wasn't happy with it. It was a period of immense frustration.
Is this taste, or is this entire experience around website?
Taste, experience. Yeah. We also learned a lot during that point in time. So I was,
but
to give you a really specific example, I was obsessed with the wines having a very premium packaging. So we had a wax top on our wines, which was first of all costly to do, but second of all, it meant that people weren't drinking the wines at the speed that we'd want them to. So bear in mind, Wednesday's Domain is meant to be a midweek wine alternative. It's a bit of a kind of unconscious, unthinking, like just grab a bottle, have it with dinner. People were waiting till their friend was coming around because it looked really nice.
Decorating their house.
So I go to a friend's house and they'd be like, just waiting till X comes over. I'm like, no, bust it out now. Like, this is to be enjoyed now. So, we learned a lot during that period of time, but it was immensely frustrating. It was immensely difficult. I didn't have the answers. I remember doing innumerable pieces of work with consultants, people who, who did know more than me and who I thought knew more than me. And I remember someone giving me a ring after one of them, and he was like, I just want to check you're okay. And I was like, I am okay, but I'm also like not, in terms of I'm so frustrated by this whole thing and I don't quite know the answer, and I can feel the opportunity slipping away from us. So yeah, it was an immensely difficult time, but I was either through blind optimism or slowly uncovering the answers, thought we would get there one day.
And what probably was the answer? Do you looking back now?
The answer was get people who really, really understand the product that you're trying to create. You need those same people to then be unconstrained by the category norms of what you're trying to create, and then incentivize them properly. So what I mean by that is our winemaker is a brilliant winemaker. He's also made beer, cider, soft drinks, gin. So he's not like, this is how we do it in wine. He's just like, this is how you make a nice drink. And that is a very, very different way to a lot of thinking to a lot of winemakers. And then the final thing is, he has skin in the game. And so he is correctly incentivized for this to be, to create a successful outcome for everyone, rather than a project fee where it's like, sorry, we've gone over time, so unless you kind of extend the scope of work, we're just not going to do that.
He's involved from an equity perspective.
Exactly.
Okay.
Exactly.
Okay. Interesting.
And again, that's very true for lots of businesses, which is, we couldn't afford him on a cash basis. So we have a mix, an arrangement with him, which is a mix of cash and equity. And then our wine agent, that's different. There's just a margin built into the product cost there. And again, so the incentive there is for everyone through different mechanisms to create the best possible product, because then you sell the most wine, and everyone's, either the value of the business is going up, or the amount of cash margin that the wine agent is making grows as well.
And they have
so everyone's winning, basically.
Yeah. Okay, that's really interesting. So I just want to get to December 2024 because looking at your company history, it just stands out so much what happened there. Firstly, let's talk about the moments leading up to it. You talked about the release of the new wines, but then it's pretty much like a PR explosion. That's really gone on to be. It was a step change, pretty much by the looks of it. So. The moments leading up to that, your feelings, obviously just like massive excitement, bit of worry.
And also, I think it's important to kind of qualify these things in terms of that was a shift change for the business, but still in the grand scheme of things, we've got so far to go. And I'll talk to you about a very interesting moment that's come more recently in a second as well. So just for anyone listening, so we're an omni-channel business. So we sell into the off-trade, which are shops, wine shops, delis. We sell into the on-trade, so restaurants, hotels, bars, and we sell direct consumer. Direct consumer was slowly kicking into gear in terms of our acquisition efforts. We were getting much more efficient with acquiring customers. So our cost of acquiring customers was coming down. We'd increased ad spend quite significantly for us. Again, still tiny in the grand scheme of things. So all of a sudden you had this lift from a D2C perspective.
Can I ask what you would attribute that to? Is that quality of creative, or is it maybe more of brand recognition?
It's all of those things, but it's having the confidence. It's really knowing your numbers to say, actually, we should double or triple ad spend now. And because I think I'd kind of bumbled along for quite a long time being like, let's just put it up like, a few percent here and there, single percentage points. And then I was like, actually, no, like, let's do this properly, because December and January, December's as busy as January for a non-alcoholic wine business, which people are often surprised by. But, people are drinking long days, they're conscious of consumption. So December becomes really interesting. But essentially, to answer your question, what happened there, December and January, we had we'd started working with Laithwaites earlier in the year, who one of the UK's largest wine retailers. They came and put a big order in, and they ordered twice so their first order was the biggest order we'd ever had, and they came back and they ordered double their original order. So that was a big shift in. We also won a distributor out in Australia, and all of a sudden, when you're shipping to international markets, you go from selling a couple of cases here and there, which is fine and really important for building a brand, to selling multiple pallets or half containers. And that's just a different beast. So for anyone listening, on a pallet, you'll have kind of, for us, anywhere between 80 and 110 cases. So if you're suddenly selling multiple pallets, like it's a different game. So that's what happened at that point in time.
And there was a big TV.
You're right. Yes. So it's kind of hard to remember all these things, and it's nice again when you're speaking with someone who's seen it from the outside, because you're right. We got a load of good press coverage. So I'm trying to think what happened. We were on.
I think it's Channel 4.
there was a Channel 4.
Denise Van Houten
Denise
said that you were the best wine alternative,
Yes,
non-alcoholic
best
wine.
alcohol-free red that she tasted, which was pretty cool. We also we got onto Saturday Kitchen, which again a lot of people watch. You know, we're big on trying to embed ourselves within food and drink culture. That happened. We were in the Sunday Times, so Will Lyons, who's a Sunday Times wine writer, he said that we were the best alcohol-free red. Jane McQuitty, who's the Times, as in the Saturday edition wine writer, wrote about us as well. So we've got this lovely photo of me with both Saturday and Sunday copies of the Times. Yeah. And so those things happen, but
do those things happen organically, or did you intentionally set out with maybe a PR agency to try and get in with these journalists?
It's a mix. So in both of those instances with the newspaper, that's through a PR agency. And we have a brilliant PR agency called LMA PR, set up by a woman called Lauren Orty, who is just like a force of nature. And I met her very early on in Wednesday's Domain, and we pretty much had PR from the get-go, which there's a school of thought where certain people say you shouldn't pay for PR, founders should be doing that themselves. The reality is these journalists are getting peppered by people the whole time.
Oh, yeah.
You want someone, A, who has a good relationship with them, and B, whose job it is to just do that, because otherwise it will always fall to the bottom of the pile. So again, coming back to the question, it was a mix of PR and just good luck, basically. But again, Helen McGinn, the woman who presented our Wines on Saturday Kitchen, I'd met her 2.5 years prior, and I would email her every couple of months being like, Helen, can we get the wines on? Can we get the wines on? Can we get the wines on? And she'd be like, oh, it's not the right time, not the right time. And then they get on, and it, you have this very brief explosion, but it is amazing. But you can see it, at Wayflower, obviously you're massively driven by the data and the numbers. It's honestly, when you go on TV or something like that, it's like a missile. Like you see it go up.
Google Live Analytics.
It's mad. It's genuinely mad. Yeah. And then it just, again, like a missile, comes back down.
Yeah.
And then like normal service is resumed. Yeah. But these things compound over time to build a greater awareness of.
But they do. You've just got a ton of new people trying your product, and a percentage of those are going to come back and do it again.
Exactly.
So it's amazing the difference that type of stuff. It's so underrated. People don't talk about PR that much. But like it's free. For the most part, it's free.
Exactly.
And it can really like transform your business.
And also you can use it over and over and over because. And there are people who do this far, far better than we do. But all of a sudden, you have an asset that you can put out through your social channels. You can put it through your email marketing. You can use that. You can use that in sales decks.
Ad creative, even.
It goes into everything. And so all of a sudden, that 10-second or 30-second clip actually gets seen by hundreds of thousands of people.
And even with the Times, like being in something like the Times, it just adds like an unbeatable credibility to your product. People are going to see your product now and be like, I am fully aware that this is good. There's no doubts in their mind now because it's been in the Times. It's like the conversion rate on the shelf.
Exactly,
almost,
exactly. And that's really, really important, particularly in categories that have a bad legacy.
Yes.
So non-alcoholic wine has a pretty poor legacy in terms of products that really aren't very nice, kind of afterthoughts, really low quality. And so actually when the Times or the Sunday Times writes about that, then exactly as you said, that's a big win.
So this growth, so we talked about it, it's obviously very exciting, but obviously the problem that comes along, and obviously Wayflower is a financing business. How are you funding this growth? If you're seeing down the line now, you're seeing, I'm going to say maybe 3x of the previous year being projected, something around that.
Yeah.
You've got to look forward to that, and you're now shifting from the odd pallet down to Australia to full containers, half containers. You need to look down the line, and you need to figure out where you're going to get the money to start producing enough to meet that demand. How does that feel? Like you've got a finance background, so quite literate in this aspect, but
and I was talking to someone about this the other day, that I am equally passionate and comfortable and happy with going to an event and pouring wines as headphones on in the spreadsheet late at night, all that sort of stuff. Like I kind of love the latter as well. The quick answer is, this sort of stuff is really, really scary. Really scary, because the numbers start to stack up big time. Anyone looking from the outside will be interested in revenue growth, but what you rarely talk about is the growth of your cost base, and that in order to achieve and recognize that revenue, you have to shell out a hell of a lot of money, and it gets pretty scary pretty quickly, particularly when you're building a brand and trying to produce a product at a good margin. You have to commit to quite a lot of stock with a mix of a plan and blind faith as to your ability to sell it, basically. So coming back to the question, how do we finance the business? We finance the business through a mix of equity and debt. And the way that we tend to think about that is equity funding, because as we discussed prior to coming on here, it's a really, really expensive way of funding a business, because hopefully the value of your business goes up. So giving away 10% at the start to buy some stock can become very, very costly at the back end when you come to sell the business. So the view that we take is any equity should go into sales and marketing, and that can be resource, so that can be people, or that can be ad spend, or that can be events, or that can be sample stock, or whatever it is. And then any debt that we're using, Wayflyer being the provider here, that goes into to purchasing stock. And what we've been able to do through building a track record with our supply partners out in Spain is we've also been able to get better payment terms. So we used to have to pay for everything up front, and now we pay for a little bit up front, a little bit on production, a little bit after, and the final chunk, a few months later. And so what that means is you've basically got this smoothing of your cash curve. So all of a sudden you're selling your wine as quickly as you're paying for it. And that's fueled and funded by debt. And that's what you want to get to. The dream is a kind of negative cash cycle. So
the orders are already in by the time and they land and gone.
Where we've got that, and where a number of businesses have this, and this is the dream, which is where you have a robust D2C operation that you fund through a credit card or debt. So basically, Shopify revenue pays out 2 or 3 days later, but we put all our ad spend through a credit card that we don't pay for till the end of next month. Okay. So effectively, we've got business cash coming into the business 50 days before we have to pay for it.
So you build up the Shopify payouts and use the credit card to pay for the ad spend and all those kind of things, and then the big lump Shopify payout at the end of the month goes to the credit card.
Exactly.
Okay, very nice. The wholesale is obviously a different animal because you're waiting quite a long time to get paid. How are you finding that? Because I think it's probably about 25, I hope you don't mind me saying, probably about 25% of the business now. Increasing.
It varies month on month, but we tend to say that we're 50%, half to 2/3 D2C, and then the rest is wholesale.
And you recently secured a deal with Ocado. Congratulations.
Thank you.
Again, another question is, how much are you expecting to sell through this channel? How are you kind of foreseeing managing that growth in demand? Because we don't have Ocado in Ireland, actually, but I believe it's massive.
Ocado is a brilliant partner. And what's interesting for brands like ours is one of the KPIs or one of the metrics that Ocado judge themselves on is size of range. Because they don't have physical stores, they can actually stock a much greater breadth of products, which makes it a really interesting place for curious consumers to discover the product. So working with Ocado has been brilliant because they're very data-led, it's very automated, and it's been hugely exciting to date. With wholesale, you've kind of got one of two things going on. So with someone like Ocado, we're very lucky that we're on their kind of new brand program. And one of the benefits of that is that we get good payment terms. So rather than having to wait 60, 90 days to get paid as you would with certain other supermarkets, we get paid in 14 days, which is brilliant for our cash flow. There are other deals that we're looking at where the cash flow or the cash cycle, the payment terms are much longer. So when we ship to Australia, for example, we have a split of, we get a deposit at a certain point, but then it's 60 days after the wines land in Australia, and they also take a long time to get there. So all of a sudden you've got 3 months of cash sitting outstanding, which can be really hard to manage. But again, if you've got the right systems in place from both a financing perspective and a tracking perspective, spend a lot of time in spreadsheets making sure that we're on the money with this sort of stuff, then it's very manageable, and it's just the realities of running a physical product business.
I believe you've taken on your first employees recently.
Yes.
So you're obviously got the spreadsheet out.
Yeah, exactly.
That, because that's going to be a big fixed monthly expense. What are the roles?
So both of those roles are commercial. And I think it's interesting, having been in startups for 10 years or so now, there was a time where the big questions were like, how much have you raised and how many employees do you have? What's your head count? And if you look at a lot of the startups that are coming through now, challenger brands, they all run pretty lean teams. Now, that's not to say there aren't loads of people working on those businesses, but they're often doing so on a fractional, a freelance, and agency basis.
A lot. See that a lot.
Yeah, and actually, when I came through, it was, you have to do things in-house or the quality will be less. And I was just like, I just don't believe that. We're a team of 3, but there are loads of people who sit around the business, from our marketing agency that we work with, Brand Hackers, who handle the growth side of things with a capital G, to product technicians, to winemakers, to advisors, to PR people. It really does take a village.
I'm seeing what. So sorry, what are the 2 roles? It's
So both. Sorry, I wasn't clear there. So both commercial. So we've got someone called Liam, who's a more junior hire, and Liam's role is to get out. He does essentially sales and partnerships. So he's getting out into the independent trade, selling to wine shops, to delis. We're also interested in some kind of non-obvious opportunities around events and all that sort of stuff. But he also does all the partnerships. So he is pouring wine. We were at the BBC on Tuesday nights, podcast awards, pouring wines there, so that sort of stuff. And then we've got a brilliant woman called Rosie who's come in as a kind of fractional commercial lead, and she's very experienced. Previously ran her own CBD business, was very early on at Propercorn, and her role is to kind of look at some of those bigger commercial opportunities, whether that's with on-trade groups or wholesalers, and that frees me up to focus on the product side of things, the international side of things, and just all the bits around the business that could be much better, which in a startup are just infinite, basically.
Do you think a CEO or the founder of a business, they really need to offload the stuff they're not good at as soon as possible and be able to concentrate on the things that they are good at?
Yeah, I think it's so dependent on the individual, because what you often see in businesses is, particularly if you have 2, 3, however many founders, they tend to have very distinct capabilities. So they do brand, I do operations, whatever, it's that sort of thing. Whereas when you're a solo founder, speaking from my experience and from other solo founders that I know, you tend to just be kind of like 7 out of 10 at everything. In terms of, you're not brilliant at anything, but you're equally not utterly rubbish. And so in terms of firing myself from different roles, it's more around where are my energies best placed. And earlier on in my career, I did everything to avoid being involved in any kind of sales. I just didn't like that moniker. I didn't want to, when I was in commercial roles, I was always trying to be an account manager or partnerships rather than pure sales. Whereas now I absolutely love that. And there's because it's my business and I really believe
as
in
an endorphin buzz, I would say, when you...
Yeah, and also you realise that, so my energies are best placed in finding the opportunities that allow us to really swing the bat, move the needle, whatever analogy you want to use. So that's kind of what I'm always trying to work out, like where's everyone's time best place, basically. It's just resource allocation.
Did you find it hard to delegate? It's something that I found quite hard when my business was at its peak, trusting outside people with stuff that you kind of have a bit of a control freak.
Yeah, it's really interesting. I think any founder of any business is a bit of a control freak to some degree. I remember a conversation with Hugh Duffy, who I mentioned earlier, who helped us get set up very early on. He was like, "You're pretty trusting of people. Like, you just kind of hand stuff over and then don't tend to worry about it." And I think both of those things are true. Like, I'm a real control freak, but also relatively trusting and very happy to hand stuff over. So I'm always trying to find that balance. And we're in one of those moments right now as a business, which is really quite hard, borderline overwhelming, in terms of like, there's loads of stuff that I'm still doing or being involved with that I just shouldn't be. And I need to spend time just saying, that's not my responsibility anymore, that's yours. Let's find a mechanism by which you can update me as to how that's going. But I need to not be doing that, or not be on that email, or not be on that call.
It's a nice feeling when you can finally do that, I'd say.
It is,
It
is. But then also you start worrying about, is it getting done?
Yeah.
Which is just a different worry.
I just want to maybe talk about the future of Wednesday's Domaine, and obviously the growing non-alcohol movement.
Yeah.
A lot of people have very strong thoughts on this. I talked about Breeze earlier, and they're just so clear on their vision towards what the future is going to look like.
Yeah.
It's going to be more functional beverages. The alcohol industry is going to continue to decrease. How do you look at it? And you must be really excited, because it is such an interesting wave that's happening in this space, and wine is the last bastion on it.
I mean, it's a fascinating trend and shift, and it is a global...
What's driving that, actually?
It's a great question, and
social media,
maybe
benchmarking yourself for something.
There's probably a bit of that. I think basically everyone's woken up to the fact that, you know, at times if you have a drink, there's a bit of a cost. And so I think, you know, there's all sorts of stats around who buys non-alcoholic products, but there's a pretty accepted school of thought that most people who drink alcohol-free products also drink alcohol. So what I think is happening is that people are just being more conscious around their consumption decisions, which is, if I drink this glass of wine, I know I might, you know, be a bit slower to get up tomorrow morning, but I'm okay with that because it's the weekend. Versus in the midweek, it's like, actually, you know, we've got a young daughter, busy job, like I just don't want to do that. But I do want to sit in the garden with my wife and have a drink or meet a friend. So therefore, alcohol-free becomes a really interesting choice. There's all sorts of things driving that as well. You know, health considerations, and health considerations can mean lots of different things to lots of different people. So that might be health consideration to someone might be, I just want to look good for my summer holiday.
Yeah.
Health consideration to someone else might be, I'm concerned about the long-term impact on my health if I continue to consume this. And that's really being thrust into the media. You look at what's going on in the US around the Surgeon General wanting to put cancer warnings on alcohol. Like there's a really interesting movement there. You've also got things like GLP-1, so weight loss drugs, suppressing all sorts of desires, of which again alcohol is one. There's a big question there in my mind as to, if you don't want a glass of wine because you're on Ozempic, do you want a glass of non-alcoholic wine? I don't know what the answer.
What's the calorie? Is the calorie count different?
It is significantly different. So
Okay,
a glass of non-alcoholic wine. So for example, our white wine, all of our wines are under 20 calories a glass, whereas an average glass of a medium-sized glass of white wine would be 100-ish calories.
Yeah.
So
Wow.
coming back, so it's pretty significant. So coming back to the question, which was, you know, this is absolutely a movement that is not shifting at
I agree.
all.
Yeah.
I think the space and the category will get busier, and that's why it's important to build, not only produce a great product, but build a great brand, because that's what resonates, that's what cuts through. And so in terms of what that means for Wednesday's Domain, we just need to keep doing what we're doing, but at greater scale. And that can mean new markets, that can mean new channels, that can mean new products. I think it will be all of those things, basically, but in quite a considered way. And you just got to work out where you place your bets and in which order, basically.
Interesting. If you were advising a founder starting a non-alcoholic brand tomorrow, what would you say to them?
Don't do it. I would
Don't take my business away.
Yeah,
or it's too
exactly.
stressful?
I would discourage them because they'll probably do it much better. What would I say to them? I would say, what's your tolerance for? This is what any founder needs to ask, right? What's your tolerance for pain, essentially, and what's your tolerance to really stick something out? Because this is something that's going to take time. You know, alcohol-free drinks on average are 1% of global alcohol consumption. So the market is still tiny.
Yeah.
So these things take time. And if you're in it for a quick buck, you're in the wrong game. And so are you passionate about it? Are you willing to stick it out? Do you have a product that's interesting and differentiated? If so, brilliant, crack on. And I would welcome anyone in this space because it's a case of rising tide lifts all boats at the minute. But I would just ask them around their motivations, really.
Interesting. So quick fire. Tool or platform that you can't live without?
Shopify.
Okay. An underrated piece of advice that you always come back to?
Underrated piece of advice that I always come back to is consistency beats intensity.
Okay.
And there's a brilliant newsletter that I read. It comes into my inbox every Sunday called Farnham Street. And it's probably a bit of an echo chamber where, you know, I love it because it says all the stuff that I believe in anyway, and it kind of feeds that. But all of the quotes that are in there are all about just keep putting one foot in front of the other. And I have a
baby steps.
Yeah, and I have a post-it note on my desk which I wrote at the start of the business. One of our investors emailed it to me, but big things are built in small steps.
Oh, I have the exact same mantra in that. It's mad when you start thinking about it that way and you just like make the first move, and then, you know, a couple of months down the line you're like, wow, I've made like 15 steps towards that, and it didn't really feel like I made any kind of big leap or something. It's just all about those baby steps towards
it is, and you can only see them in hindsight, exactly as you just described. And so it's just about, you know, being consistent, turning up every day, and just continuing to crack on, basically.
Who's a brand that you admire right now?
Who is a brand that I admire right now? whenever someone asks me this question, my mind just goes completely blank.
Yeah. Or you think of someone like Ben Francis at Gymshark or something. Yeah.
No, I mean, the brand that I admire enormously is Trip, and I think the way that they have partly created but come to own through both brand and legislation shifts and whatever else, but come to own a category at the scale that they have is remarkable. And you have two founders there who didn't have a background in startups, who had an idea, and they have run with it to a ludicrous scale. And I think the way that they continue to enter new markets, place themselves in popular culture, it's remarkable. And so I would say I've got a huge admiration for what they've done.
Nice. I've never tried them. I'm gonna have to check them out. I know them, but I've never actually.
And I don't drink a huge amount of Trip, but I think the products are good, and evidently what I think is irrelevant, because millions of people think they're great products. So yeah, I would say they're a fascinating example of a business that has built an amazing brand, but also fantastic distribution.
But I don't know if you have any Wednesday's Domaine with you. Did you bring a bottle?
I do, yes. So this is our
tasty, yeah.
sparkling rosé called Cuvée, which is lovely on days like this where it's nice and cool in here, but it about 30 degrees outside.
Great. It looks great.
Thank you.
Is it too early to be drinking non-alcoholic wine?
I don't think it's ever too early to be drinking non-alcoholic wine.
Can we open it?
Sure.
Can you reseal it?
We can't, but what we can do is we'll leave it with the team here.
Okay, yeah, nice.
So this is a nice mix of Airen and Tempranillo, and what you should get here, Daniel, is that you've got some lovely kind of red fruit flavors coming through, and then a nice long dry finish.
It really does taste like rosé.
Great.
Like it really does. On the, I don't know what the correct term is, but the aftertaste.
Yeah. And that's the finish, yeah.
Okay. It's actually delicious.
And one of the,
seriously,
pretty much the number one criticism of non-alcoholic wines historically is that they're overly sweet, overly cloying. So we wanted to create something that was dry, but it still has a bit of length, so you should get some nice acidity coming through in your cheeks.
that is genuinely delicious, and I'm not just saying that.
Brilliant. Thank you very much.
100% see that as a wine alternative on a sunny day.
Delighted to hear that.
Okay, nice one.
Well, thank you very much for having me on.
No worries. Thank you.